Okay, good morning again. Welcome to the EPOC quarterly press briefing where the chairman, Keith Duncan, will be presenting on the information for the last quarter and other details. We are very happy to have you and thank you so much for your patience because you are here on time. I know we have representatives from our EPOC committee. We have Mr. Richard Lumsden online, and we also have Audrey Tugwell Henry, and we thank you for being on. We thank the media hosts. I'm seeing representatives from Gleaner, Observer, IRI FM. We have representatives from TVJ. We have representatives from Nationwide in the room. And we also welcome online some other persons that I'm seeing, but I'm not seeing the media hosts as yet. So if you could also put that beside your name. Mr. Duncan will carry us through the presentation and we will take questions right after. So welcome again. My name is Arthur Walters. Also apologies for my camera. That's a little technical difficulty. And I now hand over to Mr. Duncan. But for those who I have not called the media host, please forgive me. And I know that once we start the question and answers, you will identify yourself. Thanks again. And over to you, Mr. Duncan.
Good morning. Thank you all for being present this morning, and thank you for your patience in us getting our logistics sorted out. Well, we're up and running now, and we're doing. Thank you, Audrey and Tugwell Henry, members of the committee, and Richard Lumsden, another member of the EPOC committee, and who really keeps us on our toes and keeps us all updated and reports coming in and provide so much information for us and context for us in our deliberations as a committee. Well, EPOC met on July 8th to review the fiscal and monetary quantitative performance indicators. Morning, Al. And we received reports from the Bank of Jamaica, the Ministry of Finance, and we had real active discussions around the monetary performance, fiscal performance, and the underlying activity that we're seeing in the economy. Is it sustainable, etc. But good dialogue, and we're here now to report give an update as to where we are as an economy, and secondly, just to kind of give you our outlook. We pulled out some key highlights, and we know that inflation continues to be way beyond the targeted range of 4 to 6%, coming in at 10.9% in June 2022. The Bank of Jamaica also projects that inflation over the next 2 years into the next 2 fiscal years could range between 8 and 9%. The Bank of Jamaica has also moved on their another 50 basis points to move their policy rate to 5.5%, which brings it closer to the rate which they consider to be appropriate, as stated in their Monetary Policy Committee statement. The next policy announcement is scheduled for August 18th, and that we will see where the Bank of Jamaica goes subject to data. But we see what is occurring in the US. I think inflation came in at 9% in the US just in the last couple of weeks. Revenues and grants and the fiscal and primary targets outperform budget for the ending the financial year March 2022, and also for the 2 months April and May, with the government of Jamaica hit its fiscal targets, actually outperformed its fiscal targets. Net international reserves still remain strong and robust, coming at $3.8 billion, and much more than is required under the internationally accepted benchmark, the assessing reserve adequacy benchmark. Real GDP growth was 8.2% for the 2021-2022 and 6.4% for the January to March 2022 quarter. So let's look at the fiscal, and we're going to first review the end of the year, because the Ministry of Finance was provided us with an update on their fiscal year, and there's really good news about how the performance of the economy in the fiscal year, with the economy performing at around 8.4%. We're not doing this anymore. Okay, so do you have the presentation? Does everyone have presentation? Okay. Well, we do have a table showing all the fiscal indicators, and what I will highlight some of these fiscal indicators to the analysts and the media. So revenues and grants came in at 31% of GDP, exceeded budget, and nominally outperformed pre-COVID levels. Nominally outperformed pre-COVID levels in terms of revenues and grants. They total 720.6 billion, and in the fiscal year, $3.1 billion ahead of the third supplementary estimates. This largely reflected, we know, the strength of the economy through the increase in economic activity, tourism, the relaxation of the COVID restrictions. And so the tax revenues came in really stronger than budget. For the fiscal year, also, when we look year over year, tax revenues came in $145 billion greater than the previous fiscal year, 2021. And also ahead of the pre-COVID levels by $70 billion. So therefore, tax revenues have recovered beyond pre-COVID levels, but nominally behind, because if you include inflation, and it would be nominally ahead, but in real terms it would be behind if you include inflation in our calculations. Tax revenue itself was $616.4 billion for the fiscal year, exceeded the budget outturn by $10.1 billion. The outturn for tax revenue specifically was $110.7 billion ahead of 2021 and $37 billion ahead of pre-COVID levels, nominally ahead. Tax revenues itself. What I spoke to earlier was tax revenue and grants. What has been driving this the tax revenues? It's other companies declaring income tax, paying their income taxes, PAYE collections, PAYE collections, tax and interest, and the special consumption tax on imports. Non-tax revenue came in a little lower than budget, but significantly higher than previous years due to the BOJ dividend. We all recall the BOJ declared a dividend of $32.6 billion, and therefore our non-tax revenues were very strong last year. But when we separate non-tax revenues from tax revenues, we see that tax revenues have recovered quite nicely. And we had 3 supplemental budgets as the tax revenues continue to outperform the initial budget that was set by the Minister of Finance. Grants underperformed budget by about $3.2 billion. Inflows from grants were $3 billion below and the 2019-2020 levels. However, as we say, the most important indicator here that we see is tax revenues, which reflects the underlying continued strength of the economy in its recovery. Seeing that the economy grew 8.2%, economic activity has picked up quite nicely. Total expenditures were $698.8 billion, which was below the revised budget by $12.9 billion. Total expenditures continue to increase year over year. Where we see capital expenditure being, which is a critical item for us, was that capital spending was 3.7 billion below budget, 1.3 billion below, no, 1.3 billion, I'm sorry, higher compared with the previous fiscal year, but came in at 3.7 below budget. Capital spending, however, remains pre-COVID levels, $19.9 billion below pre-COVID levels. There was an increase in expenditure for compensation employees, which was increased by 8.4%. And this was in line with the new salary rates for public sector workers in accordance with the wage agreements for 2021-2022. Interest costs. We're in a rising interest rate environment. The Bank of Jamaica started to move from as early as in the last quarter of last year. And we are seeing where interest rates have moved from, in October 2021, 6-month T-bill rate, moving from 2.5% to approximately 7.9% in June 2022. Interest costs therefore came in at around $137 billion, largely in line with budget, with domestic interest costs at 54.7 billion and foreign interest costs at 82.3 billion. So interest costs, while being up, were in line with budget. So therefore, our fiscal and primary balance surpluses, or we ran a fiscal surplus of $21.7 billion for the fiscal year 2021-2022, and a primary surplus of $158.7 billion. That's 6.8% of GDP. So we exceeded the third supplementary estimates. As I said, due to higher, really what is driving that is higher tax revenues. The fiscal surplus was actually $82.8 billion ahead of last year, where we ran a fiscal deficit, which was in a COVID year, of $60.5 billion. So therefore, the fiscal surplus was at $21.7 billion, came in $82.2 billion greater than the fiscal deficit we ran in the previous year. The primary balance was $90.2 billion above the previous year, coming in at $158.7 billion. As a result of that, what we see occurring is a reduction in debt to GDP to 94.1%, 94.2%. Moving from, there was budgeted to come in at 96.3%, our debt to GDP, it actually came in at 94.2%, right? That's a 15.5% reduction in debt to GDP over end March 2021, where our debt to GDP was at 109.7%. This was driven by growth in GDP up 8.2% and higher than budgeted tax revenues, better than program primary balance. So the GOJ remains firmly on track to move in their debt to GDP target to 60% in 2027-28, in line with the fiscal rules. When we look at April to May performance, fiscal performance for April to May, we see where, again, the fiscal operations are ahead of budget, fiscal indicators are ahead of budget, and we generated a lower fiscal deficit than budgeted of $9.8 billion. We actually targeted the fiscal deficit to be a fiscal deficit for April to May of negative 17.3 billion, came in at negative 9.8 billion. There was a target of the primary surplus to come in at 3.2 billion. It came in at 10.5 billion. What we see occurring here is that tax revenues actually outperformed budget by about $6.4 billion, coming in at 101.9 billion as against a target of 95.4 billion. When we look at non-tax revenue, and non-tax revenue came in at $5.4 billion ahead of budget, but when we compare to the previous year, non-tax revenue came in at $37.5 billion, because included in that non-tax revenue would have been the BOJ dividend. So when you see the fall off in non-tax revenue, that's because of that one-off BOJ dividend that was paid. Program expenditure was about 1.2 billion below budget. Total and revenue and grants, as I said, total 107.8 billion and 10.8 billion below the corresponding months as a result of, one, the increase in tax revenues for the first 2 months, April and May, but when you compare quarter over quarter, you have to remove the BOJ dividend, and there's tax revenues have performed, and total revenues and grants would be below because you have removed the BOJ dividend of 32 billion. We spoke to tax revenues being at 101.9 billion. That was driven by PAYE. Travel tax by $1.6 billion outperformed budget. Why? Because we're with the recovery in tourism stopover arrivals. Customs duty was up by was ahead of budget by 1 billion. PAYE above budget by 1.2 billion. As we said, this is driven by the recovery in tourism and the relaxation of COVID restrictions, entertainment, etc. Above the line expenditure was 117.6 billion for the review months, as I said, falling short of $1.2 billion. The Minister of Finance increased social spending just recently, where we saw an additional $2.7 billion for social intervention expenditure to include funding for the targeted general welfare support for the most vulnerable and pensioners for pensioners and parish cleanup. Now, if your tax revenues outperform, then you have a fiscal space where you can now target the vulnerable and use those revenues to support the vulnerable. This is this is complementary to the GOG assistance program with JPS, where postpaid customers, approximately 81% of households receive assistance to those consuming less than 200 kilowatt hours of 20% of their bill is contributed by the government of Jamaica in assistance. So as the economy outperforms and tax revenues outperform, what we're seeing is that there is targeted social support for those who are most vulnerable in our economy. But we will have to, this I guess will be, in September, we will see a supplemental budget which will reflect this. Public sector transformation, and we had a discussion around this at EPOC, and we got an update from the Minister of Finance and from members of EPOC, and we have noticed that it has quieted down quite nicely, and there looks to be cordial negotiations occurring between trade unions and the bargaining units and the transformation implementation unit, and they are diligently working it through. This here is a major effort for the government of Jamaica, and this has been this public sector transformation and the alignment of compensation structure, salary bands and allowances have been, like, we have been talking about this for at least 10-20 years in Jamaica, and we're taking that big step now, and I'm happy to see that, and we're happy at EPOC to see that these negotiations continue and in a very civil and orderly manner. But we are also, what we would like to see is that included in these, in the overall public sector compensation structure is a performance management framework, and also efficiency initiatives that will lead to, one, greater efficiency in the public sector, and secondly, greater service levels to the people of Jamaica. As a result of the this public sector realignment of compensation, we have projected for the wages to GDP rule, fiscal rule, to be breached. So it came in at 9.6% wages to GDP, of 9.6% of GDP at the end of 2021-22, and it's projected to come in at 10.9% for the next fiscal, for the current fiscal year. So we do expect that we will have to, the Minister of Finance will have to do amendments to the fiscal rule to allow for this. But we are supportive of public sector transformation because we believe that it is important that our public sector are fairly compensated, right? And that such that we can reduce attrition and we can have, you know, people are attracted to serve, attracted and motivated to serve in the public sector. It's very important for us because, and hopefully we will get the efficiencies, and we need to put some targets around efficiency levels, and that, as I said before, should be linked to monetary performance, to performance management targets. So let's take a deeper look at what's occurring on the monetary side. The Monetary Policy Committee expects inflation to continue to breach the targeted range of 4 to 6% over the next 2 years. Bank of Jamaica expects that inflation will fall somewhere in the 8 to 9% range over the next 2 years. And this is subject to one that that all the risks that we face with Russia and Ukraine, with the inflation in our trading partners, that all these assumptions hold in regard to that commodity prices will continue to come off in the second half of the year, that there's no escalation in Russia and Ukraine, and those are the main drivers, because it's commodity prices that are driving imported inflation in Jamaica. A key indicator that the Bank of Jamaica looks at is a survey of business inflation expectations. And at the end of May, that came in at 12.8%. And if businesses are expecting inflation to come in at 12.8%, we need to reduce those inflation expectations. Now, how does that work? The Bank of Jamaica, through their monetary policy and tightening of monetary policy, they look at the critical factors that are driving for businesses their inflationary expectations. One, and what is driving that for businesses, as noted in the inflationary expectations report, is a change in the external price of imported goods. So if we see commodity prices start to come off, as we have seen in the last month or so, then those inflationary expectations should reduce. Also, to a lesser extent, exchange rate movement. If we have seen a significant amount of stability in the exchange rate over the past 3 to 4 months. And if the businesses expect that we will continue to get stability in the exchange rate, then their inflationary expectations will be reduced. And this is what the Bank of Jamaica would like to see, influencing their policy decisions. As we said, inflation came in at 10.9%, still outside of the range. Another critical indicator that the Bank of Jamaica looks at is core inflation. Core inflation came in at 8.7% as at June 2022, which was lower than the 9.7% at May 22, 2022, but was 6.7% above June 2021. Was above the 6.7% that was at June 2021. So core inflation still remains very high and a concern for the Bank of Jamaica. And as I said, the Bank of Jamaica has moved interest rates by 50 basis points, up by 500 basis points since October to 5.5%. This brings the committee in their statement said that close to where it considers appropriate. So let's see what happens in August when they deliberate once again. The Bank of Jamaica continues to intervene, albeit at a slower rate, in the foreign exchange market. And we're seeing the stability. And I think that is very notable, that with lower interventions in the FX market, that there is stability in the FX market. And this will be flows, remittances continue to be buoyant. Not at the same levels. We're seeing a marginal fall off. However, tourism continues to really positively impact our balance of pace. So what is the Bank of Jamaica intent to cause to with their policy? They want to keep liquidity tight. They want interest on the pawn loan rise. They want to make savings in Jamaican dollars more attractive than saving in the foreign currency, and borrowing in Jamaican dollars more expensive. That is the intent, the stated intent of the Bank of Jamaica. No, we know that we do have the private sector as members of EPOC. We know this would hurt the private sector. So there is no reason why the private sector cannot have their voice heard, in that this is going to hurt us, because it will. But when you take the overall picture, and that price stability is the ultimate objective, and that inflation impacts the most vulnerable in our society, that the Bank of Jamaica must take a balanced view of all the factors and must do what it thinks is in the best interest of Jamaica, and maintaining price stability, which underlies macroeconomic stability. So when we look at our international reserves, our gross international reserves came in at $4.389 billion, and we're 129% of the assessing reserve adequacy metrics. So we have more than enough reserves for the stable economy, the need economy. Net international reserves also remain at $3.8 billion, which I said before. So let's look at the foreign exchange market. As at June 30, 2022, the exchange rate was 151.56 to $1 to $1, representing an annual point-to-point depreciation of 2%, lower than 6.1% depreciation for the same period last year. The BOJ indicates that the volatility in the foreign exchange market has reduced over April to June relative to the previous quarter. Now, this is most interesting. In the previous quarter, the Bank of Jamaica intervened in the March quarter up to March, end of March, $351.9 million. And we were able to achieve some level of stability. In the last quarter up to end June, the BOJ intervened twice with $60 million. And we're seeing stability in the foreign exchange market. I believe many stakeholders would want to see a continued orderly market foreign exchange rate in the exchange market, and also create trade in the foreign exchange and the Jamaican and US dollar trading within a stable range. And I think this is what we're seeing, a movement. I think we're seeing a movement to the Bank of Jamaica looking to maintain greater exchange rate stability and not and a more orderly market. So we welcome that. What reflects the the increased inflows for the June quarter? We had 635,000 tourists visit Jamaica, an annual increase of 82.5% over the same quarter. All projections show that the continued recovery in arrivals will continue, and we're seeing the opening up of the cruise. We got a report from the members of the Jamaica Hotel and Tourist Association around that cruise for the month of May, cruise arrivals were 110% above the same period, May 2019. So we've seen that, but cruise arrivals are at about 25% of for the period from January through May. However, what we see is an upward trajectory in cruises, and that is also very positive for economy, for attractions, for craft market, for all of these various things, the downstream activities. So all of this underlies the continuous strength of the economy, coming at 8.2% for the fiscal year 2021-22, as I said before, but this was driven by hotels and restaurants, right? At 107.1% year over year in the GDP. And as I said, last quarter, 6.4%. Mining and quarrying continues to be a drag on the economy because we know what happened with Jamaica, the closing of Jamaica. Now, GDP, what does the Bank of Jamaica, with their sophisticated economic trick models, they expect BOJ to the GDP, the Bank of Jamaica expect GDP for the next fiscal year 2022, 2023, 2024 to be within the 2 to 4% range, and the current fiscal year to be in the 2 to 4% range. So we will see the economy continue to grow. What we saw last year was really bouncing off of the lows of the COVID year. Now we expect that the economy will continue to sustain at between 2 to 4%. This is the Bank of Jamaica's projection. And we expect that tourism will continue to perform, and we expect that Jamaica will resume production in short order. Quarterly GDP is expected to return to its pre-COVID levels by December 2022. What we are seeing with unemployment rate is that employment came in at 6% in the April numbers. Notwithstanding the fact that unemployment is at 6%, the number of the employed labor force is 3,400 at 1.269 million people. 1.269 and 300 people are employed. That was 3,400 below the number employed in January 2020. So we're very marginally below the number of employed people in the labor force pre-COVID. But where we are, I think this is at the lowest unemployment rate that we have seen in decades, or maybe the life of Jamaica. And just to reflect that, the unemployment number does not reflect those that are not eligible for, have not made themselves available for the workforce. That is the labor force participation rate. There's approximately 700,000 people that have not made themselves available for the workforce, right? And that is because they're in school, they are not able to work, but we know that there's a large number, and we have heard the Prime Minister speak to it, and there's an unattached component to that number that we as a country need to really target, because this is where we can increase our labor pool, and this is where we need to focus on training for young people within this area, because between the ages of 14 and 44, there's approximately 500,000. About 250,000 of those would be in school, and the balance would be not actively seeking employment. So this is where we need to focus as a country to see how we can now increase the labor pool by having them get eligible for the workforce, and for training, human capital development to get them up and running and into the workforce. Because we're seeing, from a private sector perspective, we're seeing that we have a skill gap. We're also shortfall in the labor pool, and so therefore, and if we're going to grow as a country, we have to get into high value added jobs. So the education transformation work needs to kick in, because we need to train our people for the new economy that we're seeing, digital transformation, etc. And our young people are going to want to have attractive jobs, well-paid jobs to be able to be attracted to come into the labor force, and knowing that there are skills training programs, etc., that prepares them. So our outlook, we're optimistic on economic recovery for this current fiscal year, that we will get between the 2 to 4% projected, and we may even on the upside because of the underlying strength of the economy. The Bank of Jamaica continues to be steadfast in its efforts to sustainably rein in inflation and bring it back into the target range. As we said, the Bank of Jamaica expects that inflation will be in the 8 to 9% range over the next 2 years. The Bank of Jamaica projects that inflation should fall back into the 4 to 6% range in the latter half of 2023. Jamaican international reserves are more than adequate, and the exchange rate is stable within a range. And as I said, notably, the Bank of Jamaica has reduced the level of interventions quarter over quarter, ensuring an orderly market. This is a welcome development for all of us as Jamaicans who really want to see exchange rate stability. And no one likes the volatility of the exchange rate. It really causes a lot of noise. And we believe a stable exchange rate within a range will contribute to reduced inflationary expectations, which is a critical indicator for the Bank of Jamaica when they deliberate about their monetary policy and interest rate movements. And we also note that we have seen some fall off in commodity prices over the last month or so, and we are really hopeful that we will see this movement be reflected in upcoming inflation data. So EPOC is at one with the Bank of Jamaica in their proactive stance in executing their mandate of price stability, which is critical to macroeconomic stability in the medium to long term and growth. EPOC also recognized that the Bank of Jamaica is best placed with the data and its economic models to walk this tightrope, and we continue to be confident that the bank will continue to do what is in the best interest of Jamaica. While tax revenues are marginally exceeding budget, we expect that the government of Jamaica will see inflationary pressures along with the public sector negotiations begin to place pressure on government of Jamaica expenditures. EPOC remains supportive of the government of Jamaica's efforts to cushion the inflationary pressures on the most vulnerable, and we are hopeful that as fiscal space is available, our vulnerable will continue to be supported in a targeted manner. However, we do expect that the government of Jamaica will continue to be fiscally responsible and manage within the fiscal rules, ensuring continued macroeconomic stability. Where EPOC is very cautious is on the economy maintaining the growth momentum, because we're bounced off of the lows of the COVID year. Can we maintain this momentum? We are comfortable with a 2 to 4% projection for the current fiscal year. Where we are a little bit uncertain is around what occurs in the next fiscal year due to the geopolitical risk, the supply chain dislocations, volatile energy and commodity markets, increased interest rates globally and locally, along with the projected global slowdown in our main market, the USA, and COVID-19 in China, and we're seeing lockdowns in Shanghai, etc. So all of these are factors that we have to bear in mind, and they could impact the growth momentum that we see, and therefore we're a little bit more uncertain and cautious around growth into the next fiscal year. So while our monetary policy will achieve some price stability and reduce inflation, there is real downside risk for Jamaica's continued projected growth momentum. That is, and what we would like to be, we have been managing through the raindrops, and we're hopeful that we can continue to see this growth momentum continue, but we're a little cautious on the next fiscal year. And in our deliberations at EPOC and with the private sector and civil society and all members, I mean, what we're getting from the private sector is that they are very, very bullish, very confident in the recovery economy, where they are having challenges on the labor skills, on the labor side, the labor front, where they cannot find appropriate, skills and workers to really drive this this growth that we see in our economy, and that is becoming a challenge. And the other area where there are challenges is supply chain dislocation, because we're still having in the whole supply chain, there still remains issues for those that have to import for inputs into manufacturing, into their services. That still remains a challenge for the private sector. So as we said, we're confident that the growth momentum will continue into this year. Next year is where we are seeing that there are a lot of uncertainties, so we're cautious about that. So on that note, thank you very much for hearing me out today, and we're open for questions, right, Mr. Edwards and Siobhan?
And thank you so much, Mr. Duncan, for that detailed presentation. We now invite questions. We ask you to raise your hands. And for those who are not able to raise their hands, especially online, that you can take it in the comments. We already have one question online, so we're going to take that from Mr. Christopher Thomas from the Gleaner. You can go ahead.
Okay, thank you. Good morning once again. Okay, Mr. Duncan, just a couple of questions from me here. First of all, you mentioned at the beginning about inflation rates of 10.9%, which is below the Bank of Jamaica's forecast of 12.15%. And also you mentioned about a breach of the fiscal rule of 9.0% of GDP. For the layman, for the ordinary person, can you really explain what makes these so significant? First of all, in terms of the inflation rate of 10.9% being below that forecast, even though the rest of the breakdown that you gave looked good, but that seems to be an outlier, at least to my eye. And also, as it relates to the fiscal rule of 9.0%, why is that important? Can you explain it for the lay person? That is one question. And the other question where you mentioned,
take that question first and answer it, and then we go to the second question.
Okay, that's fine.
Okay, go ahead, Mr. Duncan.
The Bank of Jamaica had let's speak to the 12 to 15%, and the Bank of Jamaica had projected that inflation could get into the range of 12 to 15%, right? Based on what we have been seeing in terms of price movements, imported inflation, increasing commodity prices. So they were saying we could see that occurring over the next couple of quarters. However, that is based on incoming data on the movement of prices. So if there was continued volatility in the commodity markets and oil prices to continue to increase, and fertilizer prices continue to increase, grain prices continue to increase, then you would have seen like that the inflation could get into that range. We have not seen that. What we are seeing is inflation coming at 10.9%. But however, what the Bank of Jamaica's monetary policy is to look to slow that rate of growth of inflation, and to make every effort to ensure it does not get into that range, right? So what we're saying is that there is almost, we could call it a worst case scenario that it could get into the 12 to 15% range. We're not in that scenario. We're still very much at 10.9% in June and coming off somewhat marginally off of the May numbers. So we're hopeful that we can continue to reduce inflation to the 8 to 9% level over the next 2 years and stay within that range. And by December 2023, we expect to be in the 4 to 6%. The Bank of Jamaica expects to be back in the 4 to 6% range. So what we would like to see as a country is inflation coming right back down into the range by the end of December 2023. But there's a path to get there, and that is moving from the range we're in. There's a top side range that we could hit because of what we're seeing in the with imported inflation, but we'd like to see it come to within the 8 to 9% over the next 2 years, and to be able to come back within range by December 2023 of 4 to 6%. Now, in terms of, you good with that? Of why is the fiscal rules important for wages GDP number? Now, when we entered into our first IMF agreement, we recognized that we need to control the rate of growth of the wages and salaries of the public sector in line with the gross domestic product. This is a benchmark that's used internationally. And the 9% was a number based on what were the conditions at that point in time. But when the government of Jamaica undertook a salary survey to look at where does the public sector compare to private sector and others, and the public sector was woefully, their compensations were inadequate, and therefore we would be losing good people, and we would have a workforce that is not as motivated as they should be. And I think that compensation survey demonstrated that we must do something in relationship to increasing wages and salaries of our public sector. And as a result, I think the government of Jamaica, and I think we're the whole country is aligned around this, that we must deliver higher compensation levels to our public sector. But to accompany those higher compensation levels, we must get performance management, and we must get increased efficiencies from the public sector. And we also would want to see greater levels of service to the public. So we need to hold our government of Jamaica and the public service accountable to delivering greater service levels. Now that we're biting the bullet as a country from our tax revenues to deliver more appropriate compensation levels, we need to demand accountability from our public service. And we believe that their motivation levels will increase, and the attrition levels should fall, and that more people should be attracted to the public sector to serve in the public sector if the compensation levels increase. Okay.
Okay, thanks for answering that question. That brings me to my second question now. Where you mentioned about the need to focus on getting young people trained for the workforce and getting high value added jobs. How do we determine really what kind of jobs specifically to market to our young people? What is in demand? What they can get training for? Because traditionally, when young people are leaving school, their parents will say they want their child to become doctor, lawyer, whatever. But sometimes the child might not even have it in their mind, so they want to do this, or they want to do that, or they don't see themselves interested in this or in that. But yet what they are not interested in might be what is in demand, and what they are interested in might not be lucrative. So how can we market effectively what needs to be marketed for the workforce?
So, yeah, very good question. So this is where we saw the deliberations of the Education Transformation Committee chaired by Professor Orlando Patterson. And they would have looked at and analyzed the needs of the new economy. If we want to be that ICT hub in the Caribbean, if we want to be a digitized economy, what is it that what are the jobs that are required to move us in that direction? So that transformation report would have said, and the Prime Minister would have clearly stated that this is what he would want to see Jamaica move to becoming a digitally enabled society through a national ID or a digital ID as the backbone, and also to be able to we've seen this with the Amber Heart Academy, train up software developers, train up people for the ICT industry. The business process outsourcing, what we're seeing now is a move to more higher value added jobs, legal, accounting, and other areas, ICT support. We're seeing a movement. So with higher value added jobs will create higher value added goes right to GDP. So therefore, through the work of the Ministry of Education, the Education Transformation Oversight Committee, they have to now structure the curriculum of heart, of secondary schools, of primary schools to meet the needs of a global economy that is moving digital. When we look at where Jamaica is, we are behind everyone from a digital perspective. In other countries, we have some catching up to do in that regard. And therefore, it is the people and the human capital development that needs to drive that. And these are jobs that will be created in the business process outsourcing, higher value added jobs, moving from the low value added jobs, just the call centers, to more high value added jobs in technology, as I said, support services. And we're seeing that movement, and there's a deliberate effort to move us in that direction. There's a continued growth in tourism that we need to, and Jamaica, we're known for hospitality, so we need to continue to grow in those areas. Another area that we need to look at is ensuring that the wages are competitive, not only competitive for employers, but competitive for employees.
All right, thank you, Mr. Duncan. If there's no questions from the room at this point in time, so we'll take one question from the room. Siobhan, Nationwide, and then Javon Keys, you're next, and Josimar Scott from Observer. I'm noting that your hand is raised. So we're going to take it from Siobhan and then Javon. Thank you.
In light of the inflation expectation being so high, the actual rate coming down the actual
Month-over-month.
year coming down.
Yeah.
And my question is, do you think there's still a need for further interest rate hikes? Or now that we've reached the peak and it seems things are going down, that we can settle?
Right. So the Bank of Jamaica did clearly say that they believe they're almost at the top of where they think rates should be at almost at appropriate levels. So that language suggests that they could have, if they say they're almost at appropriate levels and subject to incoming data, means that if, and what is occurring in our main trading partners and what is going on with imported inflation and what is going on with the recent commodity prices. That is for the Bank of Jamaica to analyze that economic data to determine if they need another movement in interest rates. I believe the Bank of Jamaica is very much aware, and as all of us in Jamaica are very much aware, that increasing interest rates slows the economy. And no one wants to do that, but we have to ensure that we have to ensure we are able to achieve price stability, because that is what the underlying is, predictability of prices and the economy that drives macroeconomic stability, right? So do they have another rate hike in them? I would think is that they're, as they said, they're almost at the top, but if they were to move, it would be another marginal move. However, I think the risk of that happening, if the probability of that happening is lower than it was before. The probability of them increasing interest rates are low at this point because we're seeing commodity prices coming off in very recent times. And so therefore, Bank of Jamaica will be analyzing to look at imported inflation component. We know that we're holding exchange rate stable. We know that liquidity is fairly tight. We know that the banks have been moving to increase interest rates. That was kind of slow demand. So therefore, we are seeing some of, we're seeing the intended impact of the tightening of monetary policy. And we believe they're close to the top of their rates increase cycle. But that's subject to data coming in because if they expect the Fed probably will move more aggressively. We've seen the Canadians move 100 basis points last week. Bank of Jamaica, Bank of England moved too. So therefore, rates are moving globally. You know what I mean? And we're coming from a very accommodative place where interest rates were 0.5%. That was signal rate, right? So and the world took a very accommodative stance to get us out of COVID. Now we need to kind of reset. You know what I mean? And so that's my thing. I believe we're close to the top.
Good afternoon, everyone. Are you able to hear me?
Thank you very much, Mr. Duncan. We'll take the question from Javon, please. Javon, can you speak to see if we can hear you?
Are you able to hear me? All right, so I'm not sure if you're hearing me, but my question is an extension.
Are we hearing you?
What? Yeah, I'm hearing you now. So my question is an extension.
You want to type in your question if we can't hear you, Javon?
I'm hearing you. Are you hearing me?
Well, let's take Al in the meantime.
You're not hearing me?
We take Al.
Hello, are you hearing me?
Right.
Increase in tax revenues.
Are you able to hear me now?
Yeah, hold 1 second, Javon.
I heard the Prime Minister speaking yesterday, and I've heard him speak twice in a week.
Yeah.
He talked about people not really grasping the fact that the government does care.
Right.
And they are aware of people going through hard times.
Yeah.
But now with the fiscal space being created and the uptick in revenues, can they perhaps now subsidize some situations or make an effort there? I think it was very good news to hear yesterday, for instance, that there's going to be a reduction in duties on EV vehicles. So in line with that, to kind of ameliorate the worst of the impact people are feeling.
Right. Yeah, I believe that is exactly why they would have in looking at their numbers, they would have seen that tax revenues would have outperformed by approximately $6.4 billion. And therefore the Minister of Finance would have announced the $2.7 billion in addition to the JPS subsidy below 200 kilowatt hours. They're taking a very targeted approach to the vulnerable to ensure that those in the high income range, those who don't need a subsidy, who can absorb the pain, or who don't require that support. So there's a targeted approach to the vulnerable in terms of 81% of households, over 400,000 households would receive that 20% assistance from the government of Jamaica in their light bills, in the reduction. That's very targeted at a particular segment. It's also targeted by those back to school, which is about, I think, $1.7 billion of that 2.7 is ensuring that children can get back to school. So they're increased to path beneficiaries, the back to school component. Now, what we are reading from the Ministry of Finance and the government of Jamaica's actions is that once they have the fiscal space, they will target support to the vulnerable. If there's no fiscal space available in light of the fact that inflation expenditures are going to be now impacted by inflation, you also have the public sector compensation discussions occurring. They have to be very careful, because one thing you don't want to do is you do not want to get into a position where you're spending more than you are earning. You're spending more than you're earning. The fiscal rule is that we must run a fiscal surplus of 0.3% of GDP. We cannot spend more than we earn, or when you spend more than you earn, what happens? Right? So I believe the government is clear that tax revenues, this is what I am reading from their actions, is that once there is fiscal space, they will target the vulnerable. Right? But you can't spend what you don't have. Yeah.
All right.
Yes, Javon.
Thank you very much.
Good afternoon, everyone. Are you able to hear me now?
Yes, sir.
Are you still not able to hear me?
Yeah, we are, Javon.
All right, great. So my question is somewhat of an extension to that of Siobhan. The idea of a sweet spot as it relates to raising interest rates is something that will come up from time to time. Has EPOC done its own assessment to see at what point would almost be the boiling or that point of no return that could put us in trouble? Has EPOC done that kind of assessment? That's one. And two, I mean, I'm just gonna ask, the other two questions that I have now, because I do have to leave this meeting shortly. But my other question is regarding the labor market and how the EPOC or you, Keith, would view the private sector also driving that push towards increasing the labor force, possibly through offering apprenticeships or any kind of other mechanism that could help to also drive the growth in the labor force? And also, do you think adequate assessments are being done of the local labor force as it relates to the needs of the labor force by government or any other kind of institution? So those are my questions.
Yeah, okay. Thank you, Javon. In terms of what we know in terms of where inflation is, and what we know is that we're not where other countries are, where their inflation levels are, in high double digits, right? What we know is that the Bank of Jamaica has been proactive in their monetary policy, tightening movement of interest rates, tightening up liquidity, keeping the exchange rate stable. So we're not seeing where we're even close to getting to a point where of no return. That's not even in the equation, because we have an independent central bank that has done what they have had to do in terms of moving interest rates. Yes, the private sector might have some issues with that, but from a overall Jamaica perspective, the Bank of Jamaica has moved proactively. And we see where that has having the intended consequences in terms of, as I said before, exchange rate stability, movements in interest rates, and the tightening of liquidity. So therefore, there's policy impact. We're to see more of it, because there's a lag effect also of interest rate movements. But all of this is subject to more and more data coming in. What occurs in the US? That is where most of our imports come from. What occurs in China? What occurs in the supply chain side? So therefore, I believe we're well placed right now, and we have been very proactive as a country. So I don't see us getting to that stress level or that boiling point level. And the Bank of Jamaica, they're in terms of EPOC doing that analysis, the Bank of Jamaica would have done their analysis and provided the guidance that we're not going to see a place where of no return, because they have their outside forecast of 12 to 15%, and even if we get to 12 to 15%, we would see inflation coming back to the 8 to 9% range over the next 2 years, and then back to the 4 to 6%. So they have run all the scenarios, and that's where it is. And we can only be guided by the Bank of Jamaica. We don't have the sophisticated models, and we work for free at EPOC.
All right, thank you.
Has done many studies, and they know where the skills gaps are. And what we need to see hard is being, you know, and we know that Professor Patterson, Orlando Patterson, his next round of deliberations from the committee would be looking at tertiary and looking at vocational. And that is where, you know, we need to see where they now begin to weigh in on where is the economy going, what are the kind of jobs to be created, and they do have the studies. We in the private sector will be working with the Heart and many of these training institutions. We'll be launching a program very soon from a private sector perspective to address this human capital in the area of human capital development, education, and social and community transformation at the level of the community and at the level of the individual. You will hear more about that. And that will include a job creation element and include maybe, as you said, versions of apprenticeships and all that, and all the various kind of work programs that are possible. So you'll hear more about that, Javon, but the private sector is very much sees that we must do something to address this, because if you don't have the people, you can't drive the growth in the economy, and your business cannot grow.
Thank you, Terry.
I want to Javon heard us a while ago. Or we just
In the meantime,
yeah, man.
Keith, in your opinion, would you say with the supply chain problems we're having, it could be a blessing in disguise for us here in Jamaica, in the sense that it will spur us to meet the demand,
Domestic production,
industry, do our own things.
Yeah.
So in a way, there is a blessing in a disguise.
I agree. And that's what we're seeing. We're seeing a lot more nearshoring. So the whole supply chain, logistics, and architecture is changing. And Jamaica is perfectly positioned based on our location for nearshoring opportunities. And I believe the private sector is very much seized of that fact. And what we're seeing is, even growth in the high value added BPO jobs in the ICT space, which the companies coming and setting up in Jamaica, private sector inflows. And therefore, we are very optimistic around that as an opportunity. What we need, our private sector needs to capitalize on these opportunities. And we're seeing it somewhat in agriculture, because we're going to see a bounce in agriculture. We're seeing strength in agriculture. And we're seeing the bounce in the business process outsourcing, but higher value added jobs as people look to nearshore. Companies look to nearshore and make those investments in Jamaica. In fact, we got a report from the Global Services Association, the Business Process Outsourcing Association, that there's need for over 160,000 square feet of business process outsourcing space between Kingston and St. Catherine. That means there is, investors are looking at Jamaica and they are investing in Jamaica. And it's due to that same phenomenon you just spoke to, Al, the fact that on the uncertainty of supply chains, know that Jamaicans must focus around. And then there are export opportunities for us also in the region also. So it is definitely probably going to be a contributor to the underlying growth in our economy.
Thank you so much. Thank you so much. Mr. Josie Marska, can you hear us? We'll take your question now.
Yes, I can hear you. Can you hear me?
Yes, go ahead.
All right, so going back to the support for the BOJ's increase in the interest rate, I note that the MPC changed your language slightly to speak about FX stability. Would that help to abate some of the imported inflation that you have been mentioning, Mr. Duncan? That's question one. And question two is, are we now recovered based on the taxation the level of tax revenues that we are seeing now.
Okay, the Bank of Jamaica and in relationship to foreign exchange stability and as we said, there are two components to imported inflation. One, you can't control what the prices that you have to pay for international goods and services, commodities, etc. You don't have that control. What you have control over exchange rate. And that is where the Bank of Jamaica has targeted to maintain a greater level of stability in the foreign exchange markets. So therefore, previously, businesses used to reprice because they expect exchange rate to continue to move at a particular pace year over year. They would reprice their goods at particular levels. Now, if they expect that exchange rate will remain within a range, then there won't be that repricing that they wouldn't just normally do because they just expect that the exchange rate is going to move. That has worked very well for the Bank of Jamaica over the last couple of months, even with reduced interventions into the foreign exchange market, only $60 million in the last 3 months up to end of June 2022. That means the market is now settling down. I doesn't think that they have to now rush to go and buy US dollars because you're going to have exchange rate instability and exchange rate is going to move. What we're seeing now is more stability. The market seems to be a lot more settled and a lot more orderly. And this is exactly what the Bank of Jamaica is targeting. And so therefore, even if prices move internationally, we don't have to reflect that in prices don't have to have the double whammy effect or the second order effect of exchange rate now saying I have to go adjust my prices because the exchange rate has moved. So we have achieved stability. In terms of tax revenue, you asked a question, this question was on tax revenues. The tax revenues have recovered to pre-COVID levels in a nominal way. But if you were to take out the inflationary impact, we wouldn't be back to the real purchasing power of those tax revenues as yet. But nominally, we are ahead of where we were in the pre-COVID levels. That suggests that, and we know that the economy is not back to pre-COVID levels yet. So as the economy gets to pre-COVID levels, and we said by December 2023, we will be at pre-COVID levels that quarter, then we expect tax revenues will continue to perform as the economy continues to recover. But as I said, where we are cautious is that there are so many risks on the horizon, but I think the risks are more reduced at this point in time, but they still very much exist,
Thank you very much for the response. We are not seeing any more questions online. If we have one more question, we know we've been going for a while. We will take the last question from the room.
We can take two more, man.
Okay, we'll take the last question from the room.
Just one more from me. We seem to be very bullish about the economy here continuing to grow, even though it seems the multilaterals and the international community is not as confident in the global scene.
Yeah.
Are we significantly isolated that even though the IMF, the World Bank are saying that there's some serious clouds on the
Headwinds,
horizon, that we will remain sustainable going forward?
Yeah. Let me say, Siobhan, I agree. They have reduced, and we need to put that headline back in the headline. Global growth, they have reduced the global growth projections. And I believe to 3.6% from 4.4. They have also said the US economy will grow at 1.1%, right? Now, maybe what we're seeing in Jamaica, because we have to meet Jamaica and the private sector, ESOJ, JCD, micro, small, medium enterprises, various sectors, construction, agriculture, manufacturing, everyone is at the table and we have a conversation with the Bank of Jamaica to give them a sense of where we are and what are we seeing from a private sector perspective. And all reports are positive. So I'm not, there may be other factors driving our own recovery, like tourism, the bounce in tourism, that pent-up demand, and that continues. There's also the nearshoring opportunities that Al spoke to that we're seeing because BPOs are, in terms of numbers employed, are way above, at like around 56,000, way above pre-COVID levels. So there is an underlying strength to the Jamaican economy, right? And that we see, but we know that the risk factors are there. So the Bank of Jamaica, when they run their projections, they still expect the growth levels between 2 to 4% for next year, even while multilaterals and the IMF and the Jamaica, with their sophisticated models, they still believe that we're going to be in that 2 to 4% range, and that we would get to pre-COVID levels by December 2022. Right. Yeah.
Okay, thank you very much. We'll take the last question.
Yeah, climate change, very real, it's here.
Yeah.
Steve, you made a point about, and I think the first question about the young people, new industries coming on. If you look at it in Jamaica, a major industry on the coastline.
Yeah.
Right, that is a real danger right there.
Yeah.
You may have to look at the possibility of moving some of these industries, giving new industries more into the center of the country, away from the coastline.
Yeah.
As we look to develop and grow the Jamaican economy.
Yeah.
Because it's a real threat.
Yeah.
You have tourism, you've got agriculture, all on this coast.
Right. Well, that takes some long-term planning. And
Just to interrupt you, for instance.
Yeah.
I come from.
Yeah.
England, but I think in my lifetime I see here English people saying, I'm coming to Jamaica to get away from the heat.
yes.
Right? 40 degrees.
Yeah.
Before I had in my lifetime.
Yeah.
So it's real. You see the images of places in Surrey burning.
Yeah.
Wheat fires. Yeah, it's a thing to see.
Yeah. So climate change is real and a real risk, and we're hoping that the global community is taking it seriously. But we know that Matthew Samuda, as the portfolio minister, is taking a very proactive stance around it, and hopefully we will see a little bit more of the policies that look to balance development with environmental sustainability. We are hoping to see more of that. We saw one of his first initiatives was the plastics, and we're hoping that we will see more of that going forward. But we have, I believe, and I agree with you, Al, but it comes right down to orderly development, and the government of Jamaica should be providing that roadmap for us in terms of even what we call a spatial map of Jamaica to say where does development occur and where are the green spaces, what are the areas that you protect, in the same way where they're able to put some boundaries around the cockpit country. We need to understand as a country, what does that spatial map look like in order to sustain that balance between development and the environment. Yeah.
As we're wrapping up, I'm acknowledging that Donovan Wignall, another member of the EPOC committee, just joined us. So welcome, Donovan. We're actually closing of our press briefing.
But you can ask them if they have any comments, Donovan or Audrey, if they have any comments.
So Duncan is inviting you. That's Audrey Tugwell Henry, Donovan Wignall, Richard Lumsden.
Richard knows you talk, right?
If you have any comments, please feel free to join in on the conversation.
But we could ask Donovan to speak to the growth the growth in the economy, the question that Siobhan asked around why would we be, what are we seeing in terms of the strength of the economy? If we could ask, and Audrey, if they both could speak to that.
Or Donovan, will be able to join in on the commentary.
All right, so good afternoon, Chair. Apologies for being late. I had another commitment meeting that I had to attend. But as far as growth is concerned, there is still in this sector demand for reasonable credit, which would suggest that people are minded to improve, expand their business, to take advantage of the opportunities that are being presented with the scarcity of goods or the expensiveness of goods that are coming in now. So people are looking to develop solutions locally to go into goods, the manufacturing of goods that can be used as import substitution. So there is a demand for new labor. Hence, you know, there is a bit of a labor shortage, as the numbers would suggest, but the indications are positive, and every single unfortunate event internationally presents local opportunities. And I think the local entrepreneurs are mindful of that and are looking for ways to take advantage of this. So we'll continue to look for reasonable financing, as I just said, and you know, with what is happening internationally, looking for nearshore suppliers of raw materials. For example, South America is still an untapped area where we can get our goods, even though the language barrier of Spanish. We still buy a lot of goods from China, but we don't speak Chinese. So knowing what is available in other places is very important. So once we get our feelers out in the different places, South America in particular, I think we will be able to source cheaper materials. And of course, the freight from those jurisdictions are a lot cheaper than what we are seeing from out of the high demand areas like North America and the Far East. But generally, as far as growth is concerned, it's encouraging. And with all the challenges, I think entrepreneurs are still positive and upbeat that we can still make money, you know, and make profitable business, even in these very difficult and challenging times, both locally and internationally.
Yeah.
And thank you so much, Donovan. Auditor Henry, any last comments? All right, I'm not hearing from Mr. Silver. So over to you, Chairman, for your last closing remarks.
Right. Donovan spoke to the private sector funding and credit. What we have seen is that you know, private sector loans and advances extended by banks, deposit-taking institutions to the private sector in April was 8.3% up, which was lower than the 8.8% of April 2021, right? And lower than 16.5% before the pandemic, right? But what we're seeing is that is really the slowdown in loans to business, which decelerated to 3.8%. But with the lifting of restrictions, the opening up of the economy, I don't know if Audrey can speak to that, but from a banking perspective, Audrey being a member of the Jamaica Bankers Association, we would have seen you know, business probably coming back to the table after COVID and the uncertainty of COVID. But we see the consumer lending is still robust at somewhere at around 9.3% and moving up. So therefore, consumers are back in the market, even in spite of high interest rates, albeit at lower growth levels year over year in terms of loans to the consumer and to businesses, the retail consumer business.
Thank you very much. And I've seen Audrey, if you're able to comment, we invite you now to comment. You can go ahead and open your microphone.
Sorry to surprise her like that.
No surprises, Keith. Thank you so much. Good afternoon, everyone. No, I think you've covered it. We are seeing continued improvements and recovery in consumer credit. But to Donovan's point, whilst there isn't full recovery and there's still a little bit of a slower demand for corporate and commercial credit opportunities, but we are getting the inquiries, we are seeing expressions of interest to pursue projects. So I think it's just a matter of timing. And Keith, I think you said it well in that because the economy is now reopened and some of the major restrictions have been lifted, that creates an environment for business to take place and to thrive. So we expect that notwithstanding the current issues of high inflation rates and increase in interest rates in the market, that we will see some rebounding in the commercial credit space. But needless to say, as we track loans, as we track transactions, because the transaction volumes also indicate the level of activity. And we have seen good recovery in transaction volumes in the market in the last quarter.
Very good. Good, Siobhan, how that work for you? That answer work for you? Okay, good. Thank you very much, Audrey.
You're welcome.
I appreciate it.
So we are now at the end of our quarterly press briefing. We actually are noting that all the participants who we started with are still here. So acknowledging all the media houses, the representatives from the EPOC committee, representatives from PROCOM, who are all here and stayed with us towards the end. So thank you again. And
yeah, man. Thank you, everybody. Thank you very much. Thank you, Donovan. Thank you, Audrey, for your comments. Thank you, Jean and team. To the faithfuls, old faithfuls, Siobhan and Al and Javon. And Javon always busy, have to run somewhere, you know what I mean? Yeah, IRFM. You know, the Observer, Gleaner, everybody. Thank you, Ram. Everybody online. Okay, take care.
we'll be sharing with you as well as the recording. So please look out for it from the PROCOM.
Yeah.
Thanks again. Thank you, Intelligent, for being the engine behind our press briefing all the time. Continue to do a good job. And
yeah. All right, Mr. Paul, feel good about that.